You may have recalled the conversation, guys. This is not hindsight. This was a live trade call. This was a live trade call, wasn't it? So when you're looking at the trade call, we're talking about them running the stops into the gap there at 93s. Yes or no, guys? Paul, John? It was absolutely exactly what we said, wasn't it? And what happened was they ran the stops into that area, into 93. And if you look at what happened next, guys, we ended up down at 82, 81s. That live trade call that we give every single one of you could have ultimately have been worth over $1,000 per contract just by drawing the area on the charts. Just by drawing the area on your charts, guys, we went from 93s to 81s. $1,200 maximum outcome from that little bit of business by just paying attention to the structures, by being proactive on your structures, by not being lazy. Trading is a very busy job, guys. It's not about pressing buy buttons and sell buttons. That's the last part of every job you do, really, isn't it? The pressing of the buttons. But you've got to be constantly active. You've got to be drawing. You've got to be analyzing. You've got to be watching. You've got to be switched on. You know, it's a job. There's so many things happening. If you fall asleep at the wheel, guys, you're going to crash right off the road. You're going to come off the track. You're going to lose sight of what's happening. You've got to keep doing it, John. You've got to keep busy. You've got to keep working. You know, if you look at your current screens, how many people have got their hidden buying and selling levels? How many people have got completed brackets? What was the last completed bracket that you've seen on your chart? What was the last completed bracket? For gold traders, the last completed bracket, one would imagine, was a top edge, right? The last completed bracket was a top edge. So you should already have a buy and a sell level for hidden buyers and sellers based on the last completed bracket. So when you're doing it and you're up to speed and you're keeping it going, there's the last completed bracket right there. There it is. It's just completed. So you must know where the hidden buying and selling is. You must know. So you're going to be looking at that and saying, yep, I know exactly what I'm going to be doing here. I know exactly what this is. And you start doing it. You simply start doing it. You go through the process and say, there it is there. That's my deal. And then you come up with this area here and you say, there's the trade there. You come up with this area here and you say, there's the trade there. I've now got hidden buying and selling now visible. And obviously for that reason, you also have very, very nice idea about where brackets are. There's the bracket high. There's the bracket high here as well. I now know that these are liquidity grabs here. These are liquidity grabs. So now you've got something on the right. You should always have something on the right-hand edge. It's not scary anymore because you've got information on the right-hand edge. If I look to the left-hand side of this, you start to look at other brackets and you say, well, did you see any other completed brackets that were worthwhile doing? Yes, I can see one. I can see a very, very sharp reversal off of that price, and I can see a very sharp reversal off of this price. So I know that there could be a completed bracket coming up, and there it is. There's the completed bracket, yes? Yes? If that's a completed bracket, I know exactly where the hidden selling is going to be located because I can draw that on the charts there. I can now come up with an idea that there's going to be a hidden seller in that area there, which kind of ties in beautifully with what we'd seen before over here, didn't we? We've already got that idea of where that seller came in before, that hidden selling up here. So we've got this area already mapped out. So based on that, what happened in this trade example here? We start to see the price coming up. It doesn't quite reach that area, but that's okay. That's okay. We've now got some new brackets that are a little bit fresher from an informational point of view. This is more likely to be a new bracket. Why? Because this old bracket here, the buyers that came in here, they may well have done some business here, but they're still targeting this price up here, guys. They're still targeting the old bracket from these buyers here, they're still looking at profits here. Remember that. They don't go away. This guy's probably gone by now, so it's probably these two levels, okay? So you've now got these two levels that are going to stop the gold price moving. And you start watching for those two levels as possible sellable opportunities if you start seeing it coming into those prices. How did that hidden, how did that block trade buy do? All of a sudden, a little block trade buy at a price of 19s, 20s is now trading 60s. It's now $400 better off, guys, per contract. $400 better off per contract on that bit of business. You couldn't make it up, could you? You couldn't make it up. So the calendar spreads are very good because the calendar spreads give us directionality, whereas a block trade, we're guessing. We don't have to guess about the calendar spread blocks because they give us what they're doing. They tell us what they're doing. So we can simply get a very, very easy read from the calendars. We can't get the same read from the futures because whilst we might be able to make a guess about the block trades, we can't be 100% certain because there's obviously a buyer and a seller in every block. So we don't know exactly what the trader's doing as an aggressive trader. Bonds losing value on the uptick at the moment, so that's something you've probably seen. However, I'm talking about the curve. The bond curve is losing value on the uptick, so I'd love to be able to sell the bond above the 198s at the moment. That would be a nice opportunity for me to deal.